Hello and welcome to Business Lunch. Those were the headlines. I'm Nisha Podar, and with me as always is my co-anchor Pavitra Parekh. So Pavitra, after a few shades of green today, we are in the red. So take a look at the markets first on the flat line. As we speak, Nifty 50 and just about making its mind in the red as well as the green zone, but holding above the 17,500 level. That could be some consolation. Bank Nifty is the one, as I have been stating for past few sessions, is the one which really takes the lead in either recovery or the nervousness in the market. And today more so because of the rupee depreciation, which is really weighing on the sentiment of the market today. So Bank Nifty at the moment close to 1% down in trade. When it comes to the mid-cap universe, that is also quite an underperformer compared to the key indices today, but lesser than Bank Nifty. And therefore, the advanced decline ratio is in the favor of declines, but marginally. But one stock on my radar is on fire today, UPL. Take a look at that particular counter, more than 2.5% up in trade, along with some of the IT companies which are really revving up the market on the other side. Pavitra.
Nisha, just as you said, after a few shades of green, the market has moved into the green. It is just, marginally higher on the Nifty right now. But the mid-cap index, Nifty Bank, of course, still seeing a lot of pain. And the PSU banks have come in for quite a correction today. Of course, this is after the sharp run that we've seen earlier this week. So it's still, for the week, it's still up around 5.5%. What's doing well, it is FMCG and IT. You have a lot of the FMCG earnings due in the next couple of days. So we're watching out for that entire pack. And on the downside, like I mentioned, it is some of the auto names as well as the bank. So that's what's going on with the market action. We're going to talk more about that in just a bit. But first up, let's talk about the currency, because the rupee has hit a fresh record low against the dollar, while bond yields have also surged. So Lata is here with a complete analysis on what's really going on in the currency space. Lata.
Following a rather precipitous fall on Wednesday by about 65 pies, the rupees even weaker in morning trades. 83.20 or even 22.23 was a low that the currency touched. But for what it is worth, this is a global trend. US yields have surged so much. I mean, it's red hot inflation readings, UK, Canada, New Zealand. So US yields have surged, and as a result, you're seeing a dollar strengthening versus almost every currency. If you looked at some Asian currencies, I mean, yen is approaching 150. Yuan is at the lowest it has been since, I think, 2007 or 8. The Taiwanese dollar, the Indonesian rupiah, all of them are at multi-year lows. And therefore, we shouldn't be surprised by the consistent pressure on the rupee. What we are picking from the market here is that oil companies are up and about buying. Basically, all importers. Once that 82 was given up and 82.50 was given up, more and more importers panic and come in to buy dollars. On Wednesday, we heard of a foreign bank which had a lot of buy orders for a client. Now, these things are also not one-day affairs. They could stretch out. The foreign bank could be buying over several days. So we are going to see continuous pressure. The Reserve Bank, I guess, will not stand in the way when it's a tidal wave of selling across many countries, or they know that a very big client is pulling out money. They wouldn't want to make it cheaper for a person. Again, the market perception of the Reserve Bank also is undergoing a slight change. When you had, dollars for 9 months, 10 months of imports, the market doesn't try the central bank too much. As the central bank reserves come down to 8 months, there is a poker game between market people and the Reserve Bank. The market guessing that the Reserve Bank may not want to defend too much and expend reserves and may allow a bit of depreciation. So at the moment, the pressure clearly is on the currency, and there are people speaking about 84 sometime in 22 or in 23. Let me add a word about yields as well. We have seen a rise in yields, and that shouldn't be surprising. The US yields have gone up very smartly in the last 24 hours. 10-year at 4.15, the 2-year at 4.57. So, there is a concomitant rise in India. The crude prices are slightly higher, and there is an auction later today. That's another reason why people will want to sell and make space for the new bond.
Lata, very important details there on rupee movement, and Lata says that it is likely to depreciate further. But take a look at Central Bank of India's stock performance, over 3% up. There's a huge spike after the results have been flashing on the screens, and a big reason could be not just in the jump of net profit by 70%, net interest income by about 25%, but also gross NPA has substantially improved quarter-on-quarter basis for this particular bank. So keep that on our radar. But we'll stick with the banking space for now because there's more news coming in. Credit card data for the month of September indicates that SBI Card has gained market share in both spends as well as card distribution. Our in-house financial services expert Abhishek Kothari is right here with those important details. Abhishek.
Well, Nisha, as you mentioned, credit card data from RBI does show that, SBI has gained market share in spends on a month-on-month basis. So spends market share for SBI has jumped to 19.02% when compared to about 17.43% on a month-on-month basis. So spends market share declined only for SDFC Bank, a massive decline over there by 234 basis points on a month-on-month basis. Axis Bank and ICICI Bank have seen an increase in their market share in spends by about 162 basis point month-on-month and about 142 basis point month-on-month respectively. Coming on to the card distribution market share, over there SDFC Bank has been losing market share for 4 months in a row, including the RBI diktat over there or the RBI policy of removing the cards which are not active for 12 months. So ICICI Bank has lost market share as well on a month-on-month basis by 73 basis point in the month of September when compared to the month of August. SBI is perhaps the only large player who has seen a market share gain on a month-on-month basis in terms of card distribution, in September versus August. Even Axis Bank has lost market share by about 3 basis points in terms of card distribution on a month-on-month basis. Back to you.
All right, Abhishek, thanks a lot for taking us through all of that very interesting data. But stay on, because just a few minutes ago, we had Canara Bank, which reported strong second quarter earnings. It was led by robust loan growth. So take us through the details on that.
Well, records galore at Canara Bank. The gross NPA ratio or the asset quality is perhaps the best in last 27 quarters. Net NPA ratio is lower than, in last 29 quarters or even more. So loan growth is pretty strong, coming in at close to 20% YOY and about 5% or 5.2% sequentially. They have gained market share. As per my calculation, the market share has moved to 6.53% when compared to 6.33% in the previous quarter. What the strong loan growth has meant is that the net interest margin has also improved. So the net interest margin is at 9-quarter high of about 2.83%. Operating efficiency or cost to income ratio is perhaps the best in last 22 quarters, coming in at 43.7%. The CASA ratio, that's the only flip side in the results, which has come in the lowest at 7 quarters. International book, that business continues to outpace for last 6 quarters in a row for the bank. So over there, they are seeing much healthier growth than their domestic business. So P&L, both in terms of NI and PAT, it's a beat. Tax rate have reduced massively to about 22.7 when compared to 30.7% in the previous quarter. Back to you.
All right, Abhishek, thanks so much for getting us all those important details on the banking numbers. So Canara Bank, that stock is also gaining in trade because of better asset quality in this quarter, and also keep an eye on Central Bank of India, which just posted the results. With that, we'll slip into a short breather while you digest these numbers. But Shoppers Stop posts a good set of second quarter numbers, and the management will be joining us right after this short break. Stay tuned.
Hey guys, welcome back. You're still tuned into Business Lunch. Now let's talk about Max Financial, because in its conference call just a while ago today, they said that Axis Bank has reaffirmed to being promoter and distribution partner for Max Life Insurance. They also said that the valuation process was completed legally as per permitted valuation techniques. So Yash is here to tell us more about that and to take us through all of the highlights from this conference call. Yash.
Well, to set the context very quickly first, yesterday we had exclusively reported that the insurance regulator had raised red flags when it comes to the valuation methodology of Axis Bank Max Life transaction, and that could have some repercussion when it comes to the second leg of the transaction under which Axis Bank intends to acquire 7% stake in Max Life. Today, Max Life had its earnings conference call and some very crucial comments came from the management on the very same issue. What the management has said is that as of now, there is no communication from the insurance regulator to the company on the valuation methodology of this transaction. They personally don't believe that any wrongdoing was done in the Axis Bank Max Life transaction. Also, clarifying on the valuation methodology, they said that it was done as per legally permissible valuation techniques. Now, as for future course is concerned for that 7% stake, the management has said that they will see what the insurance regulator has to say when they make an application with the insurance regulator for the acquisition of that 7% stake, which according to the management will be done in the current financial year as well. A very important comment came towards the end of it. The management has said that they are committed to moving ahead with the Axis Bank Max Life transaction, which as per the same methodology which was followed earlier. This raises questions somewhere that if the regulator does not approve the previous valuation methodology, then would the two companies still want to go ahead with the transaction at the revised pricing or not? I think that's going to be the important question going forward for this transaction.
Yes, very important points there. Thanks so much, Yash, for getting us all those important details. Let's now shift focus to the earnings then. And let's take a look at Shoppers Stop. That stock is down about 3%. It posted a good set of Q2 results. The revenue is up 58% versus the last year, and the margin has also expanded to over 16% from the 11% that we saw last time around. Now, the footfalls for Shoppers Stop have come in at nearly 41 million, and this is well above even the pre-COVID levels of around 30 million. Now, to discuss the earnings and the outlook, we are joined by the management. Let me welcome on the show Venu Nair, who's the MD and CEO of the company. Venu Nair, so good to have you on CNBC-TV18. Before we break down the numbers for the last quarter, which has been a good quarter for you, I want to understand that we are already a few weeks down in this particular quarter, and it is the festive season. How have the festive demand panned out? Because of the inflationary concerns, we are trying to gauge the consumption pattern, and you actually are in the pocket of discretionary spends.
Good afternoon, and thank you for having me on your show. Yeah, I think we are well into the season, and it has been a very good Diwali so far. Early indications of that, obviously, we got from the east of the country, where Pujo is a very, very strong, I mean, that's where the festive period pretty much starts. And we had an extremely strong Pujo period. And if I were to give you some numbers, overall sales in Pujo was up 35% even over pre-COVID numbers, which gives us an indication of the kind of growth that we have been seeing. More importantly, I think consumer sentiment has been strong, especially in the premium and lifestyle segments that we operate in. And I think this segment is benefiting from three different reasons. First and foremost, it's the wardrobe reboot combined with the office reboot now, and that's driving consumer demand. This is also, as we get into the festive period, this is also the first Diwali after 2 years where people are able to come out without the fear of getting COVID, without having to wear masks. And people are wanting to make the most of it. And definitely that's driving consumer demand. And also the postponed occasions, whether it was birthdays, anniversaries, weddings, engagements, a lot of that which were postponed also now starting to happen. So all of that, I think, is driving the consumer demand. Consumer sentiment is very strong.
Right.
And we see a good growth because of that.
Would you be at the liberty, Venu, to share, the absolute sales number of the first 20 days of October and footfalls as well? Because the second quarter, you saw footfalls at over 4 crore. So, festive season so far, if you could give us some absolute numbers?
What I can tell you is the growth that we've had in the second quarter, the results which were just announced. We had a total growth of 61% over last year. But even over pre-COVID numbers, we had a 19% growth in sales, footfalls, which you referred to. And it is, I mean, the one thing I must point out, these are omni-channel numbers. So it's growth across both offline and offline. Where online, digital channels obviously also now a big part of what we do. And as an omni-channel retailer, we do believe that a majority of our customer journeys begin online, and hence important for us to look at it together. But all of these have been going north, growing very strongly, and that's something which we are continuing to see a very positive response.
Right. The second quarter numbers is something that we have in the public domain. Was wondering if you could share the one in the third quarter so far. But be that as it may, I understand that you will be able to share it only later. I'm extrapolating some numbers. The second half of the year usually gives you, what, 60-65% of the revenues. The first half you've done almost 2,000 crores. So are we looking at numbers closer to 34 to 3,500 crores on the top line for the entire year?
You're broadly correct. I think it tends to be around 60-40 is the ratio. So, I mean, extrapolating would give you the overall numbers. So on a non-GAAP basis, we expect to be between 5 to 5,500 crores.
Yeah, okay. So, Venu, I want to understand, now it's a change scenario in the next few months. And this time there will be an uptake on the because of the festive season. But given that the input costs are increasing, cost of funds is more expensive, what will be your view and guidance for the entire year? Are the kind of margins that you have shown in this particular quarter, as well as the profitability, are they sustainable?
The raw material price increases actually happened at the beginning of this calendar year, and we did take price increases when the spring-summer 23 season started around February, March, and that has been fairly well absorbed. We have seen our average bill values continue to grow, and that's clearly indicating that consumers have accepted the price increases and they have bought into it. I think what's important for us also is the segment that we operate in, and in the premium and lifestyle segments that we operate in, the demand has continued to remain strong, and that's what's helping us to grow the segment which we expect that trajectory to continue. I mean, while there is inflation and pressures of inflation, the fact that we offer some of the best brands in the country, combined with the trust that Shoppers Stop brings in, is what drives people into our own stores. And with the changes that have happened in technology, people are looking for multiple choices. And we, as a multi-choice, multi-product retailer, offer that choice across the channel of both physical and digital. And that's what I believe our customers bless us with their business.
So 16% margins in the second quarter, one of the highest that you've done in the recent past. Does that sustain into the third and fourth quarter? Improves? Is that what you're saying? Is that what we should read into?
It was the highest ever second quarter sales, profits, and EBITDA that the business had delivered. And we expect that momentum to continue.
And just quickly before we let you go, we have paucity of time here. Your beauty business, that contributes about 15% to your sales, grew 45%. Just wanted to know if that will get impacted by what Nykaa is creating. It's becoming, the platform of choice for international brands to come into India. They've also launched a B2B vertical, etc. So wanted to know what your moat around this business would be.
In the beauty, we are the largest physical retailers in the country, and at 15%. Pre-COVID, we did over 750 crores in beauty business alone. And we have some extremely strong partnerships that we have with a number of international brands. And that is something that gives us a distinct edge. Further, beauty as a category is one which renders itself to experience, makeup, makeovers, and being able to experience the product, see the product, how it looks on you, and that whole engagement that we are able to drive in our stores through our makeup artists, through our personal shoppers, has given us an edge, and that's something which we will continue to grow further. And that's what creates a moat around us in terms of being able to great experience for our customers.
All right, with competition on the digital space, you are still banking on the brick and mortar advantage that you have created. Venu Nair, always a pleasure speaking to you. Have a great quarter in this particular quarter. Thanks so much for joining us. And on that note, we'll quickly slip into a short breather on Business Lunch. Welcome back. You're watching Business Lunch. A quick look at the market, and Nifty 50 continues to be on the flat line. 17,500 levels are still defended by Nifty 50. But the real pressure in the market at the moment is coming in the mid-cap universe. Lost a lot of ground in the last 15 minutes of trade, closer to 1% down right now. And Bank Nifty has crossed over more than 1% loss at the moment. IndusInd Bank, that has lost a lot of ground, almost 5% down in trade. Apollo Hospitals, Ultratech Cement, Axis Bank, consumption counter like Titan are some of the weak links in the market at the moment. Will it be a turnaround? Session timing at lunch hour today is to be seen very, very closely. Nifty 50 holding on flat line. With that, it's a wrap on Business Lunch. But up next is we are heading into the new Samvat, and we have a very special conversation lined up with Manish Chokhani on the other side. So stay tuned for that.